Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, president of Universal Accounting Center. And here on the podcast, we discuss on a weekly basis those things that you need to be considering as you're running your business, offering quality accounting services, and of course, getting paid what you're worth. It's here that I invite guests to specialize basically on those things that we need to be considering as we work on our business. And today's going to be a phenomenal discussion. This is someone I've known for years. She's been on the show before, and it's wonderful to have her back. It's Michelle Weinstein. She happens to be the pitch queen, if you do not know. She's basically helping those individuals who are tired of the long hours and feeling undervalued. Michelle actually is the founder of the Abundant Accountant. It's where she shows accounting, bookkeeping, and tax professionals, owners of their businesses, how to escape the grind and burnout. Her unique sales system actually helps firms earn more while working less, empowering owners to create the work-life balance that they've always dreamed of. Her clients have collectively added over 20 million in revenue without sacrificing their personal lives. So, Michelle, welcome to the show.
Thank you so much for having me again.
This
Super
is a
excited.
Yeah, this is a lot of fun. We've always had great conversations, and I'm happy to have our listeners kind of listen in on this. So, give me a little bit of a background on you. Tell me a little bit about you.
Oh, well, I don't know how far back you want to go, but my background was a degree in finance, worked at a place called Moss Adams, which I'm sure many of you have heard of. And then from there, realized, well, I wasn't so much in for the cubicle life. And I left corporate, and that was my only job I've ever had. Everything else after that, I've been working for myself. I realized that I wasn't cut out for the cubicle, and for those of you who might be stuck in a job, you know what I mean, right? Like you feel like your ankles are tied to your desk, that you're working so hard for somebody else. And it was something that I just wanted to escape at a pretty young age, right? And I said, "Well, what can I do?" So I got into real estate. I actually work at Nordstrom part-time. I was trying to figure out anything I could do but have a job as a financial analyst. And then
Interesting.
when I was there, actually, Roger, what was interesting is I always found myself in all the partner meetings.
Okay.
So I was an analyst and I found myself always going to the client meetings with the M&A partners. And I said, I can't do this anymore. So I lived up in Washington. I moved back to Arizona, which is where I went to college. Quickly got hired as a loan officer with a mortgage company
Okay.
and realized I was really, really good at the selling part. I got to top 3% of the company, but because I was an analyst, I was a loan officer for a little while, but then they offered me a management position, which is actually how I ended up in San Diego. Been here
Okay.
almost now 20 years.
Wow.
But within a couple of months of being at this branch, I said, there's no way these sales goals are achievable. There's no way to achieve this. This company is going to go bankrupt. And literally about 12 months later, they went bankrupt. And I said,
Wow.
how do I take my passion? I was all about real estate, mortgages. I was loving that, but that lifestyle is actually taking a toll on my health. And what rekindled my passion at the time was actually health and nutrition again. I have a big passion for health, a big passion for nutrition.
Okay.
And I used to stop inside fast food shops, burrito shops. I was like, "Ooh, Southern California." I mean, I love the burrito shops. That was my staple stop. I don't go there anymore. Wasn't good for my health or my figure.
But
And
you liked it.
yeah, I loved it. So anyway, about a year after leaving the company, doing mortgages on my own, I got my California license for real estate. Did some real estate. I was like, "Yeah, it's okay. I'm just not that passionate about it." And I was looking for a personal chef at an affordable price at the time. Nothing really existed. So I started my
Okay.
own food company. It was a meal prep company. I
Yeah.
had no idea I was getting into food manufacturing though. I didn't even like to cook. So, but my passion for health and fitness is when this company was really born. And I grew the company. I got into a retail chain called Vitamin Shop. I convinced that CEO to sell prepared meals in 10 stores in New Jersey and New York. I pitched on Shark Tank and I landed I got our protein bars inside Costco. I mean, I did a lot. We were working, like, creating, custom meals for NFL players, NBA players. We got our food on the planes for for the pro teams a couple times, so that
Yeah.
was really cool, but it was just never profitable, and the investors kept investing. And then I remember Plated and Blue Apron came out, and they got $20 million of funding, and they were giving out free weeks of food on Facebook. I'll never forget this. And it was in March of 2017. We couldn't keep up anymore because I didn't have the $20 million to compete with. And it was about me, and there's another company called My Fit Foods, The Fresh Diet, and a few, like 3 others that all just had to close. We didn't have, a chance to even make it. Our
Yeah.
investors were like, "No more." So I realized that that path really led to the beginning of another one. And the more I analyzed that, you could call it a fail. I call it the school of hard knocks. It was like my
Okay.
$2 million MBA program. I remember that every successful person has many tales of failures to share, right? But I saw it as like, okay, I had to close the company. And yes, there were investors that lost money, but we all take risks. But how do I turn that in? And I think what that light bulb moment was for me was, how do we talk about the real stuff? How do we talk about major deals we lose? Or how do we talk about clients that you don't enroll, right? Or the days you can't make payroll. So I understand everything that any firm owner is going through. But I said, you know what? I wanna work with those people that I worked with back at Moss Adams. I really like those smart accountants. I like the tax department, the accounting, the financial department, the M&A
Okay.
department, and I said, "How do I get back to that?" And so one of my friends said, "Well, since you don't know what you're gonna do," I started a podcast called Success Unfiltered. That was my first podcast. Then I started my second one, the Abundant Accountant podcast.
Uh-huh.
And then I started selling for her, and I said, "You can be really great at tax planning, at tax resolution, at cleanups, at bookkeeping, at running a full-blown accounting firm, but if you can't sell and you can't enroll and you can't help people see your value, then what is all of that technical knowledge really worth? How do you get paid for that value?" And so I took a group of 10 people, and this was in 2018, through a beta. And I said, if I can help these 10 introverted, systemized, by the book accountants, CPA firm owners, EAs, et cetera, they all own their own firm, but variations. Some had tax planning firms, resolution firms, some had just heavy tax firms, thousands of clients. How can I help them not be burnt out, but get to their next revenue goal? And how do I show them that they actually don't need more clients, but you just need better quality ones? You need a qualification process. You need a sales process to close or enroll those clients. And how do you upgrade your current clients into premium clients so you
Yeah.
don't have to fear that these people are going to leave you anymore? And all of the people in my beta increased revenue 10 to 80,000, and that's when the abundant accountant was born, was back then. And since then, I've just been doing this so I can help firm owners lay out a roadmap that turns their firm, what I call, into a real asset, not just a glorified job.
Well, one of the things I appreciate about your story and that arc you went on is essentially the element of life. The
Yeah.
experiences we all have are part of our narrative. And one of the things that I think is important for our listeners to understand is we each have our own journey that we need to tap into and see how we can communicate that in an effective way for people to
Yeah.
understand how it's relevant to our current situation, how we've
Mhm.
grown through those experiences, how those experiences have molded us to understand whether they're failures or successes,
Yeah.
why we have the perspective that we do. But once you took that
100%.
opportunity in 2018 to simply say, here's something I'm going to do to actually impact individuals' lives, and as a beta test, see if you can actually help them individually increase their earnings. You clearly did so. And since
Yeah.
2018, you've obviously been on that path to help accounting professionals understand what it is that they can be doing to get really paid what they're worth, as I like to say.
Yeah, and I say it the same way. I think you and I both are aligned in that way. It's getting paid what you're worth, not having the feeling of being burnt out, also having control over your clients, right? Like you being in the leader seat instead of them controlling and dictating things in your firm. And I think that's really what it's all about. We have to get paid our worth, but it all starts, Roger, from we have to stop undercharging. We have to
Yeah.
stop giving away our advice for free. We have
Thank
to
you.
stop answering quick questions. We have to stop all of that, and that's what I was sharing about earlier is having those boundaries. Being able to say, "Oh, I'm bending over backwards for this person. Wait, I need to not do that." Because if you've ever gotten off a call and you realize that you just gave away some free advice, again, you just answered a quick question. It's like you feel yourself caving in, and then when you say your price in the future or you wanna charge somebody a premium, they're like, "Well, why? My other accountant does this for free and does that for free. Why are you gonna charge me?" And the thing is that as an industry, as an accounting, tax, or bookkeeping firm owner, I like to say we have to eradicate the under earning and being appreciated disease in this industry. Because if everyone, Roger, charged more and everyone held up their boundaries, the clients would all be retrained.
They
No
would. They
one
would.
would be looking for a better deal, right? Because you can have all the incredible technical skills, like every client I've ever worked with. So smart, you know how to do the work. You have the workflow process, but the problem is we have zero structure around sales. And sales is undercharging. Sales is your pricing. Sales is the boundaries you have in place. Sales is your qualification process that you have. And it unfortunately costs you thousands of dollars every single month because we keep leaving money on the table because we're doing stuff for free. We're answering quick questions. We're giving advice. We're discounting our services. We're saying, oh, well, I'll do it for lower now and then I'll charge more later. All of that is the problem.
So you've brought up a number of things that I'd like to dive into.
Okay.
So maybe we're going backwards in the
Sure.
chronology of things, but I think some of the topics you mentioned are worth just kind of diving into. Let's talk about the engagement letter.
Okay.
Obviously, at that point of the new client engagement, we're establishing what it is we're offering as services. And here it is that we're hopefully documenting what we're going to be doing. How can we use the engagement letter to set boundaries, to
Yeah.
avoid scope creep, to actually establish what it is we're doing so that we don't experience this thing where we're actually asked to perform more than we agreed to? What
Right.
can we do right there at the engagement letter to help avoid these things in the future?
Well, this might be an obvious one, but you'd be surprised how many firm owners don't have engagement letters signed by their clients. So
Yep.
I am not an accountant. I'm not a bookkeeper. I'm not a tax person. I just know that there's something called Circular 230 that my clients have taught me that you actually have to have an engagement letter signed legally in order to really work with a client. So if you don't have engagement letters signed, then that's a problem, number 1.
Hmm.
Number 2, you need to get an engagement letter signed at the time of getting payment, which should happen in your first sales meeting. The engagement letter also, what I recommend my clients to do is also outline what is not included in this engagement. So I think it's really important to be transparent about what you're going to include in that engagement and what you are not going to include because there's a lot of ambiguity. So let's say you have a monthly bookkeeping client, they're growing substantially. You've outlined in your engagement letter, here's what I'm doing and here's what I'm not. When you meet with that client every month or every quarter or whatever you're meeting clients, you should manage to the engagement letter. You should pull it up, look at the scope of work, review it with the client, assess, are we seeing anything out of scope? Do we need to set up a new sales meeting to have a new engagement letter in place? Maybe they're growing and they need more of your services. Maybe they, not only need their bookkeeping, but now that if you're doing tax, they actually have tax planning that needs to get done because they're growing so much that you can help them put in place some specific tax strategies that would prevent them from having to overpay in taxes once they go and file the return. So you now are doing advisory work. You're doing preventative work, which has nothing to do with your original engagement. So I recommend that they bring the engagement letters up, Roger, in meetings and you manage to that. And there's like one page that specifically outlines without all the legal jargon.
Yep.
Here's what is going on with our engagement, and here is not what's not included. And if you start to see that you're doing elements of work for this client that have nothing to do with that engagement, that is your signal to set up a new sales meeting. Don't take care of it in the
Yep.
current client meeting. That is the trigger for a new sales meeting. And that's how you can avoid scope creep. That's how you can avoid undercharging for your services. This is how you can avoid giving away free advice and knowledge for free. Just because it's in your head doesn't mean you have to blurt it out.
There you
That
go.
is how we protect what I call, Roger, our inventory. So
Yeah.
for my business, for your business, for every firm owner listening, your inventory is what's in your head. It's your most valuable asset, and we have to protect that. And in order to do that, we have to have structure around our sales process, which is what we're talking about.
One of the things that I think is so important to iterate here, and I discussed it literally yesterday
Oh,
with an
cool.
accounting firm owner, is exactly what you described as it relates to the engagement letter, including not just what the services are that were agreed to, but
Yes,
those that they chose not to engage with. And by
correct.
doing so, what it's doing is it's providing for you a future discussion when they want to have or thought something was included, your ability to point out, no, we've discussed this and it isn't anything you're paying for. And that right there does facilitate that additional meeting that you suggested that they
Yep,
have of maybe we need to sit down and reassess what it is we're
correct.
performing for you, and let's reconsider what it is that you need and perhaps adjust the services that you're paying for. That right there is a separate meeting, as you indicated, and
Yep.
it's definitely something worth having. So now let's go to the boundaries. You've used the word boundaries here, and I love it because
Yes.
it is part of the scope creep. Yes, we do have within ourselves the ability to answer some questions very quickly, but setting boundaries, what is it that we can do to maybe establish some boundaries? And more importantly, when that easy question comes up for us to answer, what can we do to avoid just blurting out the answer and yet schedule another meeting to say, that's something we ought to discuss. Why don't you schedule some time and come in, and then we can dive deeper into it. Let's talk about that a little bit. So
Beautiful.
begin with boundaries.
Yeah, so a boundary is something that you have to create for your own business, for your own firm. Everyone's boundaries are going to look different. Some of my clients' boundaries are the following: I will not work with any client who doesn't pay me up front and sign an engagement letter anymore. They are sick of accounts receivable. They're sick of being a free bank. They're sick of having cash flow problems. They're sick and tired of being lending at negative percent interest, because if they had that cash in the bank, they could actually go reinvest that and make, 7, 8% compounding interest on that money if they had it. They are no longer wasting their time and their admin's time billing clients in the past. Everything is done before the sales meeting. The invoice is created in advance. That's a boundary. Um, the engagement letter is created in advance. That's a boundary. They are done living behind the 8 ball, that we're so proactive that you have so much time and freedom. Because for those of I don't know, Roger, but AR is a big problem for many people.
Interesting. Okay.
And yeah, and that's one of the biggest boundaries that you can set. So if you're not getting paid in advance, tally up how many hours you're wasting trying to do billing for clients. Thinking about what did you do for a client, and then you never even wrote it down. So now you can't even bill for it. So you just did more free work. Those are all boundaries that we have to set in place. Another boundary is I am not going to work past 5 p.m. Another boundary is I am not going to work more than 8 hours per week, 52, 50 weeks out of the year, 48. I'm going to take 4 weeks of vacation. I'm going to take 2 weeks of vacation. I am no longer going to do things in a rush for clients without getting paid for it. You on your health insurance card, you've got like your regular copay you pay a doctor, right? And then
Yeah.
there's the thing called the ER. Well, in the world of accounting, bookkeeping, and tax firm owners, I believe that there is nothing that requires an ER fee. However, your clients have been trained that there is sometimes an emergency and you just handle it. You just do things back, bend over backwards. Okay, well, here's the boundary. You can say that if I do anything in a rush, I'm going to charge my ER fee. On my copay, Roger, I think it's $35 for a regular visit and like 425. So what's 425 divided by 35? I have no idea.
No idea.
But I'm gonna guess it's like 4 or 500% more. So if you wanna charge 4 or 500% more because they think they need something that day or in a rush, great, do it. That's your boundary. So those are just some I could talk about this for, like, the next
Well,
hour.
well, let me chime in. I've got a few that I'd like to
Okay.
suggest because these
What
are the
are
ones that I proposed.
okay.
One, as part of the engagement letter, I think it's important to establish a recurring meeting that happens with the client. So it's never every month we're trying to figure out when we're going to get together again. So the
Yep,
boundary is we
yep,
have this recurring meeting. If you have something that we need to discuss, we'll discuss it then. So save it. You don't have to email me daily, call me daily, text me
yep,
daily. Just save it till that meeting. We'll meet then. If it's something that is urgent and it cannot wait until that meeting, then like you've been speaking, it's an emergency and it's outside of the scope of what we've got as an agreement, and
yes,
therefore it may come with an additional cost. But that
yes,
standing meeting, just schedule it. Then all of a sudden, what happens is everything that's leading up to it can be captured there as a discussion item for then. And that way, it's more obvious that anything else outside of that meeting may actually incur an additional fee, such as you were
yeah,
explaining as an emergency fee. The second is the preferred method of communication. The boundary should be, what do you want? Emails, phone calls,
yeah,
text messages? Because one of the things that I think becomes very confusing is what's the preferred method for each of the clients. And I want my preferred method because I'd like them to understand what's easiest for me to actually facilitate.
yeah,
And that then is something that's communicated as a boundary. Don't call me, don't text me. But like you also mentioned, after 5 p.m., unless it's emergency, if you contact me afterwards, email me at 8 o'clock, text me at 8 o'clock, call me at 8 o'clock, I'll get back with you tomorrow. I'll return your call. I'll
yeah,
text you tomorrow. I'll email you tomorrow. But just because you've reached out doesn't mean I respond immediately. And it's establishing those boundaries for them to understand that from a peer to peer point of view, we're treating others with respect. And I think that's very
yeah,
important. So, great discussion about boundaries because I think so often in a client pleasing approach, we tend to just kind of acquiesce and do whatever's
yeah,
necessary because we want happy customers. And so if they bark,
totally.
we're gonna jump, right?
Well, and the other thing too is that in your engagement letter, you get to create the boundary of those meetings, the ones that you're setting up the same time every month so you're not wasting your time. But hey, if they miss the meeting, they lose it,
Yeah.
right? Like that needs to be in your engagement letter. That's
Well,
another added boundary.
yeah,
You
I'm happy to reschedule, but if they're gonna miss it, you're right. They
Right, if
forfeited it
they
because it's not.
no-show, they forfeit, and that
Yep.
needs to be spelled out in the engagement letter.
Yep.
Or if you need to reschedule, please notify me 24 hours in advance. That
Yeah.
needs to be in the engagement letter. That's also a boundary.
Yes. These things, when communicated up front, avoid so many problems in the future.
Oh,
And and
totally.
and I wouldn't necessarily consider, or at least I hadn't considered this a boundary issue, but I wanted to I do want to mention something that you said about payment because honestly, I don't deal with any accounting professionals that have receivables. In fact, if they do, it's very, very few, and it's possibly that it's more related to the tax preparation work that they're doing. But as it relates to accounting, there are three typical ways that generally people charge for their services. One is they get well, maybe there's four. There's the invoice. You send the invoice. Who's doing that? I don't know. But the other happens to be
Don't
you have
do
payment
that.
method on hand, and that payment method on file is then used one of three ways. Either one, it's charged on a recurring basis at a specific time each and every
Yep,
month. Well, that's great because boom, the first, the fifth, whatever,
yep,
it just gets charged. There's no receivables there. But the second two that I highly discourage, but I do see, is sometimes they'll get paid upon receiving the work. Well, you're putting your business at risk because if the client doesn't want to meet with you or give you the work, you're chasing them down to get the work to then justify billing them. I
yep,
hate that. The other is you don't bill until you've actually met with the client and returned the work. So you've done it and now you're getting paid for it. Well, then the client can just avoid meeting with you to
yeah,
receive the P&Ls and the balance sheet and have that meeting. So now you've done the work, you've recorded all the transactions, you've got everything ready, but they don't want to meet with you and they keep pushing off that meeting. Therefore, if your terms are based upon you meeting with them to charge, well, they're delaying your ability to collect those fees for services already rendered. So those two methods, I highly discourage them.
yeah,
I like the recurring payments, and thus you
100%.
avoid the receivables that you were mentioning earlier.
Yep,
Yeah,
100%. And
this
I think, the receivables, it's still, I would say, an issue with at least 20 to 40% of firm owners.
fascinating, fascinating.
Yeah,
Well,
that I've
fortunately,
seen, that I've talked to, and it's I know, it's a problem. There's services out there and softwares that you can use to eliminate that, but
yeah.
I think it's more of a mindset shift from the firm owner that you gotta make these changes, and I think you have to really think about Do you want to be stuck at the revenue you're at and always being on the cash flow roller coaster ride, wondering how the heck you're going to grow your firm, where you keep sacrificing time and energy, and now you're angry and pissed off because you are like, I had one person yesterday, Roger. They're like, "Yeah, I'm borrowing on a line of credit because I have so much outstanding AR." But
Yeah.
honestly, like, it's not your guys' fault as a firm owner. You were taught how to do, like, technical work, but you weren't taught how to have sales elements and processes in place.
Yeah.
And this
Well,
is how to protect your value in your inventory, and just these things weren't discussed, so
yeah. Well, one of the things that I think lends itself to the AR is the pricing methodology. So let me just illustrate this. If you're
okay.
doing hourly billing, you don't know until after the fact what they're paying. Therefore, you have to invoice them, and it's always a question mark as to what that amount is. So yes,
Yeah,
you even if you have a card on file, it's varying every month, and therefore there is a chance of receivable because you're invoicing them accordingly. The thing that's meant to avoid that are flat rate billing and menu pricing because it's a predetermined amount that they're agreeing to. The other is revenue based. Well, revenue based, you can also still establish what that monthly fee will be. The last is value pricing. And value pricing, even though it's something that's varying client to client and so forth, it should still at the engagement be an established amount that you can then charge on a recurring basis. My point is if you're still doing hourly billing, that's what's causing you perhaps
yeah,
to experience the receivables problem that you have.
yeah, or on the tax side, you just keep doing work, and then you bill after you do the work, which makes no sense to me.
Yeah, yeah,
You don't buy airplane tickets and go take the flight and then pay for them. No, you pay months in advance. I've bought tickets now for a trip a year from now. If
yeah,
I wanna go on an excursion, like I'm gonna do a safari, you pay a year in advance. You never will go and do a service, if you don't pay in advance and reserve the spot. If people wanna work with you, they should make a payment that shows the commitment, the financial commitment, and, "Hey, I want you to work with me and be the firm owner I work with."
yeah. I
And
agree.
you can also, um know exactly how much support you need. How many team members do you need? Do you need to hire another high level tax person? Do you need to hire, you can actually forecast your volume and know exactly what you're going to be working with. And for many firm owners, we want to get rid of the volume. We want to work on more of the high technical stuff. I just had one of my old clients, actually, Roger, on my podcast, who I helped in the beginning, and he was doing $10,000 a month accounting firm, and now he's doing 100,000 a month. And everything shifted because he created a sales process,
Hmm.
because he had these boundaries in place, because he got paid up front. He stopped finally trading time for dollars, and he even said, I am now the one doing the sales. I am not giving up this role. I 100% delegate all the work, the client work, and I've been able to have more revenue coming in the business so he can hire premium type support, a tax planner, a CPA, a high level CPA, everything he needed. He has enough revenue for to generate and pay to put what I call golden handcuffs on people, like, where
Yeah,
it's too good to be true
yeah.
of a position, but he has the best team in place. Sounds
So,
like a great deal to me,
oh yeah.
once you've got this element figured out, and he was able to do that in just a couple years.
So I want to transition at this point, and I want to ask a question regarding the challenge that many of the listeners may experience, which is I'm pricing what I have been pricing. It's what I'm familiar with. My clients are agreeing to this. How do I raise my prices? Can you just address what is maybe the best way to go about price increases with current clients and maybe the process to maybe introduce or go about doing that?
Yeah, I just covered this. I did 2 webinars yesterday on this, right? Like, how to overcome the fear of raising your prices, and I
Yeah.
think that's really what it boils down to, is the fear. So I think in the beginning, you have to list out, like, what are those things you're terrified of that, you know, you need to get clear on, because if it's almost like, if you don't admit that you have a problem, we can't fix the problem, right?
Okay.
So some of the areas you might ponder would be like, "Oh, well, Michelle, no one's ever going to pay me that much." Or, "You know what? My clients, Roger, have been paying this amount for so long. Why would they accept an increase of fees?" Or you know what? I really want this new client, so I'm going to continue to discount a little bit because I'll raise my prices later. Or you know what? I've been doing this for so long, Michelle. I'm just not good at figuring out what to charge. Like we have to actually outline and write out what do you feel is the thing that's in the way. So I think that's the first thing a firm owner should do. Then you have to say, well, okay, are those truths or are those just limiting beliefs and fears that just they don't align with you anymore, right? It's not aligning to the firm owner you want to be.
Yeah.
Until you admit that you can see these are all the issues and reasons of why you haven't raised your fees substantially. I just talked about that yesterday too. You can raise your fees for inflation, or I've gotten people tell me, "Oh, I've raised them 10, 20%." I'm like, "Well, what about the 200%? What about the 500%?" That's what my clients do. And until we can get past our limiting beliefs, it's really hard to change that. But I do want to share some of the truth, okay?
Okay.
Because the truth is the right clients, right ones, will gladly pay you for the value you provide. So sometimes we need to think about, well, maybe we don't have the right butts and seats. And if you think about the airplane, and I know that, we have mutual friends, but if you think about the airline industry, I'd say most firm owners that have pricing problems have run their business like a Spirit airline, Southwest airline, like super cheap prices. Your tray tables are half the size. The seats are crammed together, right? You're more volume driven versus a private jet where you only have 16 seats and the prices are 5, 10 grand a piece. So the right clients will say yes because they see the value you provide. I will pay for a business class or first class seat any day because I know the value that's provided there versus getting an economy seat on a long flight. It's just not going to happen. So we have to say, where am I screwing up? Where am I discounting where clients don't see my value? Because when we discount, we answer quick questions, we do all that stuff I talked about 30 minutes ago, we're actually attracting the wrong people. So we have to have an energetic shift before you can say, oh, well, here's how you're going to change your prices. Also, if we continue to say, well, I don't know how to price, pricing is actually a skill. And it's a skill because you deserve to get paid more than what you're getting paid. But the value of that skill is understanding your worth. And until we understand our worth, then it's really hard. So I actually have a freebie if you actually want to give that away. I think it's the abundantaccountant.com/values. There's a spreadsheet that you can actually go fill out for your homework.
Thank
But
you.
yeah, but you have to understand your value first. If you don't know that, then you can't price. So here's what I mean by that, okay? If you know your value, you know that your clients have a major problem and it's not going to get resolved without you, right? Like if they have a tax issue with the IRS, they need resolution help. If they have a business, they need monthly accounting and bookkeeping. If they are paying millions of dollars to the IRS to Uncle Sam, then they need tax planning help. So they every single person in the country needs you. And we have to get really clear on that. Also, your expertise and your knowledge is your most valuable asset, which I talked about a little bit ago. That's your inventory, right?
Yeah.
And in order to do that, we have to say, well, what am I really worth? So some of you have EAs, CPAs, masters in tax, like all these different educational things. There was a value of how many hours you actually spent. And now I don't believe in charging hourly, but I do believe is when we take an inventory assessment, we have to go and assess how many hours we invested. And then we take those hours times whatever an hourly rate would have been at that time to assess the value of that investment. Does that make sense?
It
What
most
about
definitely does. Yeah, one of the things that I think is very important about what you're sharing here is, first of all, that self-assessment of your worth and
you
really
have to,
determining what
because
it is.
otherwise you don't know what you're gonna price yourself at.
Exactly. The second thing is appreciating the investment you've made in time and money to acquire the skills that you have to be the professional that you are. And
Correct.
with that realization, you've called it inventory. We have to realize that those things that are obvious to us, those things that are the quick answers, those aren't just simply common sense things. Those are things
No.
that have come because of the experience and training we've had. And therefore they have a value because of the time and money that it took to get that understanding,
Yeah,
that experience, that
exactly.
knowledge. So I really appreciate that perspective. The one thing that I would add, and then I've got another question for you, is the fact that with price increases, I think there's always a value discussion to consider. Is there something more that you can bring of value that can complement that price increase to maybe remove some of the shock of why this transition or change is happening?
Yep,
And then the second thing I would also do is timing. I mean, clearly you can leverage time of year, end of year, those types of
yep,
things as seasonal events to justify the increase, because I'm already getting my letters as it is right now telling me what pricing increases are occurring with the vendors
yeah,
that I use. So I mean, there's just a variety of things that we can use that make this obvious and at the same time comfortable to do with our clients. So very,
yeah.
very important. So Michelle, here's what I'm going to do. I want to ask a question regarding gratitude. What is something
Okay.
you're grateful for?
Oh my gosh, so much. I am so grateful right now. I got a dog. My dog is telling me that I'm stressed out because she's stressed out. She's a mirror to me. She's gotten me to walk 10,000 steps a day. I'm grateful because we go and volunteer. She's a therapy dog. So we go to schools, we go to the airport, we do what's called de stress hours. And it's just so cool to see how, not only has she helped me, but I think I have helped her too, but she also can make an impact on so many people. So I would say for sure, I'm super grateful for Mila right now.
Very good. Yeah, you introduced her right before we began, and
Yes.
it's nice of you to do so. In fact, for those viewing, you can actually hold up Milo and let everyone see her.
Well,
Um,
she's, sleeping in her crate right now, and
Let her be.
I'm
Let her
gonna leave
be.
her. Yeah, she knows what I do when I podcast. She naps.
Nice. All
Yeah.
right. So what I'm going to do is I'm going to wrap this up, but as I begin to do so, I want to invite my listeners to take advantage of an offer that Michelle is extending here. This is something that you can each take advantage of. It's basically a free strategy session that you can do with Michelle. You can go to the episode description and there find the link to schedule that time with Michelle to discuss essentially what it is you're doing as it relates to pricing and what you could perhaps do
Yeah.
to increase and get paid what you're worth. So definitely take advantage of that. In
And
addition to
the
that,
link's theabundantcall.com is
yes.
where they can go book the complimentary strategy session.
So
Yeah.
it's theabundantaccountant.com
No,
or
theabundantcall.com.
because
Yeah,
in
the one in the link is the one for if you're looking in, like, show notes or something,
oh,
but if you want one to remember, because 'cause you're like, "Ooh, I wanna talk to her," you're like, "Ooh, I wanna stop my AR, I wanna stop discounting, I wanna start commanding premium prices, I wanna get my boundaries in line." Like, if you wanna have a chat and you wanna remember it, it's theabundantcall.com.
perfect,
Yeah.
perfect. Yeah, that's different than the URL that I've got in the episode description. So definitely do what she just said. Go there, or if you're needing to go to the episode description because you're running, jogging, doing the yard work right now,
Yep.
or driving, by all means, go to the episode description, and I've got a link here for you to take advantage of. So do that. As for the sponsor of today's show, that's Universal Accounting, they've provided something here that I'd love to invite you to take advantage of, and it is the Accountrepreneurs Challenge. You can go to universalaccounting.com, and there in the free resources, find the Accountrepreneurs Challenge. This is a 90 days challenge for you to work on both your personal and professional well-being. It's enabling you to actually build the premier accounting firm, focusing on things such as time management, your business plan, and so many other things. So I invite you to actually take advantage of the abundant, or excuse me, the Entrepreneurs Challenge, and that is free, by the way. And obviously, I've got abundant in my mind for a very good reason here. All right, so now the next thing I'd like to do is just kind of a quick recap or summary of the conversation. Clearly, I was excited to speak with Michelle because she is a wealth of information, and she began by sharing a little bit of her backstory as to what it is that got her to 2018, where she started working with accounting professionals to essentially help them get paid what they're worth, doing that beta test, helping them realize that they could put tens of thousands of dollars of more revenue into their firms. And having had that success, she continues till today working with accounting professionals to address a myriad of things that they're struggling with as it relates to pricing, boundaries, as she mentioned, their engagement letters, really those things that we may want to question or wonder about as we're looking to get paid what we're worth. So I like the fact that we were able to talk about boundaries. I think that's something that's oftentimes overlooked. So that was a part of the conversation that I thought was very helpful. I also appreciated the portion about the engagement letter, specifically including things in the engagement letter that are not part of the engagement, things that are
Yep.
services that they're overlooking and choosing not to take advantage of that may enable us to revisit and address them later on. And hopefully, when scope creep may come in, reference back to and point out that they are obviously not paying for them already. So, those are really good parts of this conversation. The other thing is it related to gratitude. She pointed out that she finds value with her dog there, providing kind of that mirrored support. She can see when she's stressed, she's able to actually take advantage of times going out on walks and so forth to decompress. And I think that's something that we should all consider just so that we can stay grounded and stay focused. So, with all that being said, Michelle, do you have a closing thought that you'd like to leave with everyone?
I guess my closing thought is just to really stand your ground, know that you are worth whatever price you want to get paid, and people will respect your time once you start putting boundaries in place and respecting yourself at a higher level. You will get paid what you're worth. You will never get ghosted ever again for people that feel ghosted and clients just walking all over you or just disappearing on you. And it is possible to make all of these changes in a very, very short amount of time, and that you have the ability to do it. You have the technical knowledge, and it's not your fault that maybe you don't know everything that Roger and I talked about today. So, for those of you that want to have a conversation, I'd love to talk to you if you own an accounting, tax, or bookkeeping firm, and you can do that at theabundantcall.com.
Perfect. Michelle, you're wonderful. Thank you for sharing that. As a wrap up to this, here's what I'd like to do. If you've enjoyed this conversation and haven't already, subscribe. We'd love to have you subscribe to the show and listen to us each and every week as I have guests sharing with us various things as it relates to tax, tech stacks, training staff, starting the business, building the business, marketing, sales, just a myriad of things that you need to consider as it relates to your business so that you can have the premier accounting firm in your area. I'd also invite you to go to universalaccounting.com. It's there that we have the free resource section. It's there in the navigation to take advantage of, where we've compiled a number of free ebooks, workbooks, a number of activities, basically things that you can leverage within your firm regarding a variety of topics. And so go there to check out that information. You can also in the navigation find the podcast section where we've put together highlight reels. These are podcasts that you can dive into with playlists. These playlists are topical in the sense that they are more relevant to your current situation. So whether you're dealing with mental health, you're dealing with maybe onboarding clients, maybe it's marketing or selling your services, these are a variety of episodes that we've had that the listeners have identified as being their favorites, ones that they have found resourceful and helpful in working on their business. And I invite you to take advantage of those playlists going there. And then lastly, I do want to invite you to GrowCon. GrowCon is an annual conference that we have for owners of accounting, bookkeeping, tax businesses. It's here that you come and hear from the experts, those individuals that are specifically addressing what we should be doing to work on our business in the coming year. At the same time, it's here you get to interact with your peers, those individuals like you who are in the process of building their businesses. It's here that you get to make new friends and, more importantly, collaborate with those individuals to better service your clients, perhaps. And then lastly, it's my staff, myself, and those individuals who are committed to helping you be in business for yourself, but not by yourself. Come and join us for GrowCon, and I look forward to seeing you there. It's there on the website that you can find the information regarding the event, buy your ticket, and get all the information you need to join us for GrowCon. That being said, thank you for being with us today. Michelle, it's been a wonderful conversation. And always remember this: if it's about accounting, it is universal. Take care and have a great day. Michelle, that was wonderful.
Awesome. Thanks. That was
Thank you.
fun.
So, what I'd like you to do now is in the chat, I shared
Oh,
that
I see
chat.
it. Okay.
I'm going to have you record that and you can just read it. You don't have to worry about looking away. And we're going to get that little promo reel from you.
Okay. Now?
Yep.
Okay. This is Michelle, and it was what, oh, I guess.
It's
Okay.
whatever adjective you want.
Okay.
It
This
was, and
is
I'm waiting.
this
What was it?
yeah, this is Michelle. It was amazing to record with Roger an episode of Building the Premier Accounting Firm. We discussed boundaries, pricing, engagement letters, scope creep, anything sales related and making money. This is the episode you want to listen to. So I invite you to listen, join us, make sure to subscribe to his show. and dive in.
Michelle, that was wonderful.